I'm sure you've all heard of Six Flags. It is one of the most popular theme park chains in the world. They own and operate 27 different parks. They have made billions of dollars throughout the company's history. But all of that popularity and wealth eventually came to an end. How did it happen? First, we need some background. In 1961, Angus Wine opened the first Six Flags theme park. It was immediately popular. 6 years later, in 1967, he opened Six Flags over Georgia, and in 1970, Wine, the owner of Six Flags at the time, sold the company. The Penn Central Corporation started managing the parks in 1971. The company then built a park in St. Louis called Six Flags St. Louis. They built more parks until the company was sold again in 1982 to the Bally Manufacturing Corporation. They then opened a seventh park, Six Flags Great America, in 1984, and they went on to acquire/build over 15 parks across the world. During that time, Six Flags was bought by multiple other companies, including Time Warner, which would give Six Flags the right to use Warner Bros. Characters. Anyway, this substantial growth kept going until 2004 when things started to go downhill. Dan Snyder started to show great interest in purchasing the company. However, Six Flags was in substantial debt. I mean $2.4 billion in debt. That's about 22 times their yearly net income. So they started to sell properties and companies to make up for the lost money. One of the reasons behind the debt was terrible financial decisions. For example, when Six Flags acquired Geauga Lake in Ohio, they built 5 different roller coasters within the next few years. This happened with multiple other parks. A year later in 2005, there was a big argument over the company's board of directors, but it didn't end there. Dan Snyder, previous owner of the Washington Redskins, bought Six Flags the same year. That was, in my opinion, a terrible decision. Later in 2006, Six Flags was still selling parks. Hurricane Katrina pretty much ruined Six Flags New Orleans. Company executives got $70 million less than expected. Fast forward to 2008 and things took another turn for the worst. In 2008, Six Flags was alerted that their company had dipped below the minimum requirements in order to be on the NYSE, or the New York Stock Exchange. The minimum requirements for the New York Stock Exchange are that you must have a market value of public shares of $100 million or an IPO market value of $60 million. Six Flags noted that this situation would most likely turn into bankruptcy. They lost attendance because people didn't trust riding a roller coaster at a bankrupt company's theme park. Financial trouble kept haunting the company for the next year. Six Flags was in trouble. It was nearly $3 billion in debt. All hope was lost. They filed for Chapter 11 bankruptcy. It seemed to be the final nail in the coffin for Six Flags. But something miraculous happened. Six Flags came out of the depths as Six Flags Entertainment Corporation after the company's bondholders decided to create a reorganization plan. Jim Reed Anderson became the company's new CEO. The company did excellent and gained lots of money. Debts were paid off and financial holes were fixed, but they still had one problem. They kept making terrible decisions. Fast forward to today, and Six Flags ticket prices are about $55 per ticket per day. That is way less than pretty much all of their competitors. Therefore, the company had to make up for the money that they are losing out on. It has led to the parks putting sponsors on everything possible, even roller coaster trains. Another terrible decision is that they keep building extreme high thrill rides and very little family rides. If we take a look at Disney World or Cedar Fair parks, almost all of their income comes from families with little kids. Six Flags builds rides for teens and young adults. Teens and young adults aren't willing to spend as much money as families are. A few high thrill rides are great, but they also need some family rides in order to boost family attendance and income. Even the CEO of the company said the parks are like cheap daycare centers for teens. He says he wants the parks to go a little bit from what I call the Kmart, Walmart to maybe the Target customer. The new CEO has been making some terrible decisions though, as Six Flags has lost $100 million according to their third quarter results. Here's what I think about the situation. I personally hope that Six Flags upgrades from the Walmart style of parks to a Target style of parks, whatever that means. However, if they keep this downward trend going, they will probably go bankrupt again, and this time they might not make it out. I post a lot of content like this, so if you enjoyed it, please subscribe. If not, I'm fine with a like. Peace.